Bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, the pressure was on, especially in the tech sector, KG. The Mag 7 was more like the Meh 7. Is that just kind of a one-off move from your point of view? It just made sense?
Yeah, it definitely made sense. I think, if you're reading your Twitter or X, I mean, people are freaking out right now that we had this drawdown in the market, especially when you're looking at the NASDAQ. But if you kind of look over the last week or so, last 5 trading sessions, we have been in the consolidation range, only trading maybe 30 points in the S&P 500 to the upside and downside here. And so we had just a situation where the market was, kind of compressing, and we did see a little bit of a fracture to the downside yesterday, and let's see if that's going to continue. We have to just also be mindful. There's seasonality that's in play right now. We've been kind of talking about this over the last couple of weeks, where the volatility index, if you're looking at the VIX, was actually pretty low compared to what the 15-year average is and what we see around this particular time. So we did have a little bit of a re-rating with the VIX, but even the VIX right now is still sitting at around 15.7. That's only implying around a 1% move. Now, once again, we had a rotation trade. It wasn't a sell everything type of trade. Value definitely outperformed technology. The high growth stocks or those high beta stocks, the Palantirs of the world, the Oklos also got hit pretty aggressively yesterday. But once again, I think we have to treat this as a innocent until proven guilty type of narrative here. And until we break the 20-day moving average to the downside aggressively and sustain below that level for several trading sessions, I think right now you treat this as a pullback. In the past, when we've had these rotational type of trades where defensive names outperform the high speculative growth names, those have been buying opportunities. So I think we just have to kind of be measured in our assessment of this market right now. Is there some froth being taken out of the market? Yes. But is this the top right now? I'm not sure. We just have to wait until the technicals really allow us to be able to confirm that. And a break below 6,200 on the S&P 500 would kind of give you a little bit more confidence that maybe a trend shift is on the horizon.
Oh, that's a good, I like the way that you're framing that, KG, especially given that yesterday, I mean, so often we focus obviously on the S&P 500, but the Dow hit that intraday high yesterday and ultimately was the winner of the day. And you point out the strength in certain sectors, real estate, consumer staples, utilities. Is that actually a good sign to see some of that rotation?
It has been. I mean, we've had these type of transitions before where we have utilities, materials, industrials really outperforming for, let's say, 3 sessions. And then we also then see technology and communication services starting to rally and lead the markets. And that's what gets us to new all-time highs. Right now, if we do see a distribution when it comes to the allocation of capital in these sectors, and it's just rotating from one to another, but for the most part, we're not seeing net outflows in the market, then that's overall a positive. And once again, we set ourselves up. August is usually a tough month. We've actually been faring pretty well in August compared to what the historical average is. September is also going to be a tough month, usually in the market. And then once we have those drawdowns and those consolidations, we prepare for the end of year rally, going into Thanksgiving and then going into the holidays within December here. So I think right now, once again, we let the technicals really dictate your thought process when it comes to these markets. And if you're taking some profits, that's okay. I mean, at the end of the day, these stocks have really aggressively re-rated higher. Palantir is trading at 93 forward multiple when you're looking at sales, forward price to sales. I mean, it's very expensive. It's been going on very up really aggressively, up 1%, 2% days. It's not uncommon for it to kind of pull back a little bit and try to find a structural area of support in this market. And I think, once again, that's how you have to really treat this until something fundamentally shifts. Now, maybe that happens on Friday with Jackson Hole. Maybe that happens when the Fed meeting comes around in September. But for now, this seems like any small news event is just a reason to sell, and I think that's exactly what happened. You had the MIT report that came out regarding AI, and that AI implementation of AI's properties within companies are really not profitable at this point in time. And then you had this restructuring of the artificial intelligence unit within Meta, which also may lead to some layoffs, kind of fueling that speculation that this might be the top for artificial intelligence, and I'm not sure if that's the case.
And KG, let's dive a little deeper into Palantir, down 5 sessions in a row. And there are some who make the argument on the sell side that its valuation was stretched anyway. So, maybe that did need to happen. But do you see that as just like a, say, kind of, sentiment shift in AI tech, or is it just the pullback, a healthy pullback?
Yeah, it's a cooling off for now. Until we see otherwise when it comes to the price action, you look at it as just a pullback, a correction, and until some buyers really step in. If you kind of look at that chart, look at the trajectory, the primary trend is still to the upside here. We've had these aggressive pullbacks before, consolidations, and then continuing to move higher. Until we actually have a shift in that price action, you got to go with the trend. The trend is really your friend right now. If you're looking at Palantir and if you're kind of wondering, okay, what's that level that you see a little bit of a shift? It's going to be around that 145-ish area. That has been an area of resistance that kind of flipped to an area of support. Once we start breaking 145 or you go down to 130 or so here, that's when you start making lower lows within this trend, and that's when you have to question it. Now, unfortunately, that's still around $20 away from where we are at right now, so we could still see an aggressive pullback, but from a technical standpoint, higher highs and higher lows are still a bullish trend, and that's what we have right now, and once again, you got to have confirmation before you could really try to call a top. And is the valuation stretched? It has been. But the valuation's been stretched for the last year and a half, Diane, and no one really cared about it. Do we care about it now? That might be the question, but the price action and volume is really going to confirm that, not just speculation.
Okay, let's talk about a stock that is getting hit hard in the pre-market. Target. They're announcing a new CEO. They've put out their latest quarterly results. The stock is down more than 10% right now, as if it wasn't already pretty beaten up year to date. It's been down more than 20% before today's expected move. I'm curious to know, one, why isn't this seen as a positive, the new CEO, if you have insight on that? And then just some of your takeaways on the numbers here.
Yeah, from the CEO standpoint, I'm not too familiar with the new CEO, so maybe there is a little bit of concern that since he's been with the company for so long, it's not really going to be a new vision that really kind of takes over when it comes to Target. It might be more of the same. That might be the speculation there. When you're looking at the numbers, obviously they were not great for the quarter as well. Earnings, the adjusted earnings per share came in at $2.05. Street was looking for around $2.09 here if you're looking at the average here for estimates. But revenue did actually beat $25.2 billion. Street was looking for $24.91 billion. And they maintain their outlook, but they're still looking for low single-digit declines when it comes to sales on a year-over-year basis. And you still see stagnant comparable sales for the most part as well. Comparable sales were down around 1.9% year-over-year for the quarter. They're still having some issues when it comes to products, and even demand and traffic continues to slow, and they actually saw traffic declines each and every month since January. That's something to also be mindful of. But their digital sales did actually exceed the street's expectations, and you are seeing a bright spot there. It did grow around 4.3%, but this company just hasn't seen that meaningful turnaround as of yet. Now, the price action, if you're looking at $94, or let's say it goes down to $93, that's right around where it was trading at back in May. And so that has been a firm area of support. Let's see if some buyers really step in, or do we actually get a flush within this name? There's a couple of things that's actually happening when it comes to Target once it trades down around $93. The dividend yield actually goes up pretty substantially. That's one thing. So value investors kind of look at it as an area where it becomes a little bit attractive. And you do have a significant volume node there as well if you're looking at the one-year chart. So yes, we are seeing a drawdown here today, but this has been familiar territory in the past where buyers have stepped in.
Okay, and then let's talk about your targets for the S&P 500 today. It's been weaker this week. What are your targets to the downside and the upside?
Yeah, so if you're looking just at the morning flows here, to the upside, 6430 is your first area of major resistance. Obviously, we're going to be focusing on the 6400 level. That's going to be very key. But to the downside, if we break that, 6370 has been that lower end. Those puts are actually gaining a little bit of traction this morning. So let's see how we fare here. And once again, we have to just look at the price action. We got to be calm about this. This is kind of normal at this time of the year, August and September, where we do see some volatility. And this is completely normal. 6200 on the S&P 500 is the critical area of support that we need to hold, Diane. We go below that, then we start talking about a reversal in overall trend in the S&P.
Okay, great wisdom there, great insight. That's our Kevin Green, Senior Markets Correspondent. Thank you, KG.